everyone to the weekly crypto recap show where we go over all of the stuff that's happened in crypto in the news throughout the week. This is, of course, brought to you by Crypto Insider, and I'm absolutely delighted to partner with them on the series. So as always, we're going to go through a lot of articles and different news bites from the week. If you want to read more about any of this, I'm going to be posting links from the Crypto Insider website in the video info for you to check out. So on the show today, I wanted to welcome back to the show Zaphoid, aka Chris Karabats from Smart Cash. Welcome, Chris.
Thanks, Naomi. It's a pleasure to be here.
It's always wonderful having you on, and we have a lot of stuff to cover. And throughout this show, we may have a couple of other guests joining. One of them is Caitlin Long. Now, we know that in the news, a big thing that happened this week was SEC release some guidance, and this is long awaited, and we'll go more into depth when she comes on to talk about all of that. But I'm pretty excited to touch on that topic because there's a lot to digest there. So excited to have Caitlin helping us through all of that. To start off with, Chris, let's talk about the price, because that's all everyone has been talking about this last few days, like 5,000, forgetting that it was like 20,000 a few months ago.
Yeah. I always, hate talking about the price, but you really can't get away from it this week. This is really what everybody's talking about. Everybody's like, is the bull market back? We're all going to be rich again, Lambos, moons, and whatnot. Well, to sum it up, early Tuesday morning, over basically 60 minutes, Bitcoin shot up $1,000 to over 5,000. I think peaking at around $50.80, $5,080.
Peaked at 50. I would have been buying.
a few years off. So it was very sudden. I mean, at that night, I'd already fallen asleep holding my fussy 6-month-old, and I woke up and looked at my phone to see all my alerts going off and going, what the crap just happened? But it drug everybody else up. A bunch of the alts, Bitcoin Cash has had a frankly amazing 7 days, doubling in 7 days. Litecoin's also been pretty good. Really, this is just everybody's happy. The bull sentiment is back. All those people who said we hit 2,000 before we hit 5,000 were wrong. Everybody's thrilled.
Everyone is pretty happy about this. And as usual, let's just mention this. Like, as soon as you see Bitcoin doing well, everyone comes out of the woodwork to start being a detractor again. And we saw that this week. There's like silence from critics for a little while. No one really cares. They're like, oh, Bitcoin's not really, going anywhere. And suddenly this happens and everyone's like, Bitcoin's gonna ruin the world. So let's talk a little bit about some of that.
Oh, there were some pretty amazing articles out there. The mainstream media, Mashable posting something about, Bitcoin goes up 20% in one night. And it's like, nobody learned anything from the last crash. It's like, you have no idea what you're talking about. If you read the article, everybody in the comment section was all over him. It was beautiful.
That's nice.
He was not a popular fellow in his comment section. And so much so he was actually trying to troll his own commenters. It was really sad. And then you have, the usual, Bloomberg, posting things, and CNBC saying, hey, we're likely going to see cryptocurrencies collapse. They have to make sure to calm down all the people who might be tempted to go and free themselves from the banks by using cryptocurrency. They got to make sure we're frauds, we're all scammers, just using this to buy drugs, as a later article will talk about. We're all criminals just because we don't want to have our lives controlled by central banks.
And you have like the CNBC article, like they tweet out like, don't buy Bitcoin, warns wealth manager. We're likely going to see cryptocurrencies collapse. And it's not like they said the reverse when you saw it down. It's like, buy cryptocurrency. We're likely going to see cryptocurrencies bounce back. Like, it's just this very one-sided opinion. It's no wonder that mainstream adoption is slow in this, because if you listen to what the news has to say, is they only ever come out against it. When it does badly, they're against it. When it does well, which is proven they're against it then as well. So it's pretty funny.
Well, I'll always keep in mind, CNBC are the people who did a show on how to buy XRP the day before it collapsed like 50% back in January 2018. And they're pretty backwards. There's the classic contra CNBC indicator where if you bought every time they said it would go down and sold every time they said it would go up, you'd do pretty well.
That sounds about right. Do we know why, or do you have any theories as to why this surged? I mean, there seem to be some big orders coming through. There are a bunch of reasons, people speculating all over the internet. People saying like, the technicals foreshadowed this move, and they're saying that this has to do with like the mining reward that's going to be halving next year, but there's always like a period of a year beforehand when these things start to happen. And like, I mean, it's what are your theories?
Well, there's a few things that happened. As far as the TA calling for it, very easy to say the day after this happens. If you were saying if you're saying I'm all in today because it's going to moon tonight, good on you. Then your TA is strong. Nobody was saying that. Everybody is just saying, hey, look, these are why you should listen to me and buy my program because I'll teach you how to buy in the future. But really, there were some big orders that went through, apparently. Cumberland is an OTC desk, and they had 10 separate bids of more than 1,000 Bitcoin each go through within an hour that night. So, 10,000 Bitcoin going through during that 20% surge, which is a pretty substantial bid. And you're kind of wondering, why would people do market buys for 1,000 Bitcoins at a time? And then you get into a little bit deeper there and you wonder, well, they probably had longs already placed. This is just after the next quarter has started. This is maybe manipulation, or maybe them going, it's time to buy.
Yeah, like it's hard to know what the difference is there sometimes.
Yes.
So you had like Coinbase, Kraken, Bitstamp. There were orders spread across all three of those, $100 million worth, and a lot of people say that this was a trigger. This seems reasonable. I mean, even in traditional markets, you have large enough players; they have the ability to move markets. So in crypto, which is a lot smaller, then this sort of thing does happen. And I mean, it's as you said. Like it could be someone being very sneaky there and manipulating, or it could be someone saying, oh, okay, well, I have a lot of money and we just finished the first quarter and there's this thing called Bitcoin, haven't bought any yet, I'm probably going to buy a lot of Bitcoin. It's not out of the ordinary at all.
Now as for TA and whatnot, we the 6 weeks before this happened, they were all closing green. And this was the first time that had happened since 2017, which is a pretty good sign overall. And that could have been a trigger for somebody, or it could just be we've reached a sentiment. Now, a lot of people think we're going to go back down. But again, these are all the same TA people who said, I don't necessarily know how to prognosticate the future and everything.
What, I do know. Don't?
No, I don't.
Where is your crystal ball?
I'll bring my magic 8-ball next time and just have it answer all the questions. But the volumes, I mean, admittedly, with the caveat that we looked at volumes last week and how 95% of them are fake, yada, yada, yada. But the volumes did spike quite substantially. We've had more volume now in Bitcoin than we've had for, I want to say, over a year. And keep in mind that volume in USD price is more volume in Bitcoin, considering the Bitcoin price is much lower than it was then. Overall, there's a lot of good stuff, a lot of interest going on. I mean, as we talk about here every week, there's a lot of activity going on in the space, even among all of the institutional players and the big money people. So it makes sense that we're having a good time here. We floated in the, high 3s, low 4s for quite a while before this happened. And everybody's happy with it, so I'm not going to look a gift horse in the mouth too much.
Right.
We'll just have to see how this plays out and keeps going, because it's nice to feel the bull rush once in a while.
It sure is. And you had some consequences of this bull run, apart from people now tweeting about Moon and Lambos once more, which we all love to watch, don't we? But you had, for example, BitMEX. They're now compensating users who were affected by auto-deleveraging. So when the bull run happened, it caught BitMEX by surprise. And so they automatically deleveraged some positions there, which they'll now be compensating. So that's interesting.
Yeah, and this is a nice test run for a lot of these platforms where, we would expect these issues to come in the next bull run. We all remember the issues with a lot of these platforms in, November and December of 2017, where they were fraught with technical issues. especially the leveraged ones where people lost a lot of money because of that. So it's good to see BitMEX doing this. Now, to be fair, they probably had to do this. Otherwise, they were getting a whole bunch of bad press and they were going to lose a whole bunch of business now that they have a lot of competition in that space, as a lot of the other players are allowing people to place leveraged orders. So this was something necessary for them to do. And hopefully it's a reminder to all of these platforms that they need to make sure their ducks are in a row, because the interest next time will make the interest last time look like nothing. But on the plus side, Coinbase, Kraken, Poloniex, all of these big players, nobody really had any issues. The only big technical issues I've heard of during this period was the BitMEX technical issues. So that is excellent considering the volume spikes that we saw on all of these platforms during this trading period.
Right.
So that's excellent. These places are just that much more well positioned for the next cycle.
Right. So let's move on. I want to talk about this new blockchain group that has been started in the EU. Now, this has things like Swift, IBM, Ripple. There are about 100 firms and other organizations that have joined this new blockchain group. Its purpose is to promote adoption of blockchain across the EU, and it is called the the International Association of Trusted Blockchain Applications. That's a mouthful. Otherwise called enact, which is a much better acronym. So, what are your thoughts on this, Chris?
Well, when one TLA is not enough, you just stick two of them together.
Exactly.
This is more industry interest in blockchain specifically. As for crypto, being positive for crypto, we'll see what these people actually do with the blockchain. There are other associations like this, but I think this is the first one that is just all about businesses. So probably a good thing. Ripple being involved doesn't make me thrilled with it, but that's Ripple.
Swift as well. Are they talking about like the Swift banking system?
Yes. Yeah, that's the banking system that banks use that Ripple supposedly is a direct competitor to.
Exactly. So we've got Ripple, and then we've got Fiat Ripple, and it's interesting. The whole point is that this is meant to be like some global stakeholders forum. So seems. It's an interesting group. We'll see what happens from it.
Yeah, and the EU is an interesting place to do this with because of their regulatory environment and how they can impact a whole bunch of different countries at the same time and test a lot of cross-border stuff. So it's not a bad place to dry run a lot of this. But this is also Swift trying to maintain its position in the industry. And I really should have looked about how much business Swift does, but I know Swift moves a whole lot of money every day. It's the de facto way to move money between banks. So they are definitely threatened by things like the JP Morgan coin and IBM's XLM dealing and Ripple itself. So it makes sense that they would be trying to pay attention to this and make sure they still have influence over the new direction the sector is going, and possibly flex their own muscles by launching their own blockchain-based solution.
Yeah, potentially. The good thing, again, with all these systems, they're all voluntary now, so people can choose whether to opt into certain things. People can now go to banks that use different protocols that they prefer. So there's a lot more choice than we had before. So it's not clear whether, when you talk about flexing their muscles or trying to maintain their prominence in the industry, setting up sort of a coalition, it always seems like a good idea. They're doing it with competitors as well, so it's not like it's kind of some strange monopoly thing. People might suspect this is going to be some cartel of shady dealers making decisions, but you can't really have that in a marketplace where there are no barriers to entry and there's competition and it's all voluntary. So as long as crypto, has that ethos about it and isn't completely curtailed by government, then an organization like this, it seems like it could be a good thing.
Yeah, and keep in mind, one of the purposes of this organization is to deal with regulators and policymakers to have legal predictability as well as integrity and transparency. I have to use scare quotes around all of those because, as with anything dealing with the government, typically they mean the exact opposite of what they say.
So from anyone who's listening to the podcast instead of watching the video, let's say air quote in front of everything that Chris just said.
Quote mode on, legal predictability, quote mode off.
Thank you. That's very helpful for our both the visually impaired and podcast listeners. So I appreciate that. So now let's move on, Chris. We've got this interesting case here that I kind of want to discuss the implications of this and some other issues I have with it. So you have this Canadian court, and they've ruled that this drug dealer must hand over $1.4 million in Bitcoin. And at face value, you kind of look at that and you're like, oh, you know, they're drug dealers, they're using Bitcoin, Canadian courts are coming down, rule and law and order and all those things being maintained. On the other side of things, this is a completely new paradigm. This is a world where courts have to ask people to hand over money because they can no longer seize it. Now, in the past, when people have had money in bank accounts and have their assets in traditional finance, accounts can be frozen, accounts can be seized, you know, the access and property, all of this stuff can be seized. But when you're dealing with digital assets that no one else controls and you're the only person who can access, really what it comes down to is an individual deciding whether or not to comply with things. And we can say like whether or not this is a good thing or a bad thing. Obviously, you know, bad guys will be bad guys, and sure, we want bad guys to go to jail, we don't want them to have resources and all that, but we really have entered this new era of the individual being able to control their own finances and law enforcement trying to deal with this new era. You know, if they can no longer force people to do things, what are they going to do? And what does a world look like where they can no longer force things?
That was my first thought when reading this too, is, and normally when you'd read articles like this, you'd read that they seized this money, they locked his bank accounts.
Exactly.
The bank just handed it all over. For this time, like, well, we have to make you do it. Now, admittedly, they have all the guns, they'll lock him in a cage, and he'll probably do it, just like what happened with several other people the governments have arrested and they seize Bitcoins. But it is an extra step they have to go through. It is something that they have to do. And I thought that was just a very interesting thing that I didn't really hear anybody talking about, because, you know, at the high level, it is just the same. The government's coming to take your money. It doesn't matter if it's Bitcoin or cash, but you actually do have to give it to them. They cannot seize it from you, because they can't force you to give up a password. They can't force you to give up your PIN. They can't force you to give up your seed phrase or anything like that. They have to ask you to send the funds over, which is interesting.
It's definitely interesting, and what I like about this, I mean, this is the paradigm shift that no one realizes is coming. Like, we're looking around the world, we're seeing it become more authoritarian, we're seeing encryption being disabled in countries like Australia and New Zealand, which means that by proxy, America and Great Britain and Canada, you know, it's all disabled as well. When you have backdoors in devices and you have all of the surveillance, and then you have people curtailing what videos you are and aren't allowed to share, and then you have people being sent to jail for 14 years, like teenagers being sent to jail for 14 years for sharing videos. Like, you could look at this and be like, wow, this is this Orwellian nightmare of control and overreach, and it's a little scary. On the other side of things, the narrative that the media is not covering is how we have more control than we've ever had. Like, when you had the 3D gun printing debate, for example, the narrative when everyone was talking about what Defense Distributed was going to do, and Defense Distributed was the company that created the blueprints and wanted to distribute open source these blueprints for how to make your own 3D printed gun at home. And before we talk about the dangers of guns and the dangers of having 3D printed guns, like, keep in mind that these are really shitty plastic things that probably will blow up in your face. They might fire a couple of times. Like, it's really just the underlying principle that we're talking about here, like the ability to someone to share blueprints online, because this gun was not dangerous and you needed like metal bullets to have it work anyway, so there's no way it could get through like a metal detector undetected. So let's talk about the narrative that was completely ignored in all of this distributed technology, and all of this decentralized tech we have now with currencies, with 3D printing and all of these things. They're not saying that the tables have turned, which they absolutely have. The courts were saying, will we give Defense Distributed permission to post these and have it available to people? The cat's out of the bag a long time ago. These are all over the internet. If I type in right now on my computer 3D printed gun blueprints. I will have like dozens of websites. I will have Wired articles saying the best places to download 3D printed guns on the internet. Like, this stuff is everywhere. So the fact that they even have like the gall to be making proclamations about what they will and what will not allow is interesting. Because the narrative is now not whether or not they'll allow it, it's what we're going to do now that this can't be stopped. That's what no one's talking about. It's like they're in complete denial about the state of things.
Yeah. It's just the emperor has no clothes. And everybody's in agreement that he has a bunch of clothes and they actually have control over this, when everybody actually knows that they have no control whatsoever. And they're putting teenagers in prison for 14 years for sharing a video.
It's insane. It's
just taken by itself. That is insanity.
Yeah.
That is totalitarianism, and that is the kind of thing that's a grain of sand that will start piling up, and we're going to get a large reaction to this as time goes forward. People will not stand for their kids being locked in prison for sharing a video or watching a video or for reading a PDF online. I mean, that's
it was so sad watching that though, Chris, when I found out about that, and to see the lack of backlash. Like, all of the posts that I saw, they were all talking about, acceptance of religion and all these things. Like, these are great things. Don't get me wrong, these are great things. But there wasn't a single post in my feed that was outraged about a teenager being sent to jail for 14 years for sharing a video. That was shocking. That was shocking.
That is not the approved narrative.
Oh my God.
I hate to get all, wonky conspiracy theory, whatever, but we all know that, the media that's supposed to be a counterbalance to our government is actually just a wing of the government. We know that all the three-letter organizations out there have fed articles to the media, that they're just pushing the narrative for the state. This is something that we know that's been going on for 50 years. There's publicized documentation out of declassified documentation out of it from 50 years ago. This is still going on. This is not, again, this isn't hidden. It's just nobody knows it. It's just they have managed to condition us so much that, the media is our friend. The media is going to keep that mean, Republican government in check. And we're just supposed to trust everything they say, when in reality, the media is pushing the narrative. They're keeping the people in check. And eventually, like we're seeing in Paris right now with the Yellow Vest protests, nobody in America knows what's going on there. It's been going on for 20 weeks. These protests in Paris are more violent than the protests in Venezuela. They actually have the military live firing on protesters in Paris right now. Live ammunition. And that's not even happening in Venezuela, the country that's supposedly collapsing. And yet nobody knows, because the media is carrying the water for the government.
Absolutely, and that's the way it was a lot easier for them to do it before, but it's harder now that we have more decentralized media and the kind of democratization of media that we've seen in the last decade or so. So I want to welcome onto the show, I'm just bringing Caitlin into the chat now. She's just arrived, so let's change track and let's talk a little bit about the SEC. And while she's just coming on, I think that her camera and everything's getting sorted out. So I want to mention that I got a power chat from Bitbacker. So someone sent me $5 in smart cash. Thank you so much, whoever that was. You didn't leave your name, which you don't have to in Bitbacker. You can send things anonymously if you want. But it says, if Bitcoin is going to ruin the world, then by all means have some smart. So I really appreciate that. Thank you to whoever sent that through. I appreciate that. So Caitlin is meant to be there, but it seems that her video and audio is not through at the moment. So while she's coming through, I want to mention some things that happened this week. Chris, did you watch the Elon Musk thing unfold on on Twitter? I actually caught wind of it through Jason Nelson. So he was posting memes about it, and I was like, is this photoshopped? And then I looked at his page, I was like, it's not. So Elon Musk calls Dogecoin my favorite cryptocurrency. He labels himself the CEO of Dogecoin. It's kind of this funny internet Twitter thing that went on.
Yeah, I love, Elon, whatever you may think of him, he is very entertaining. He certainly knows how to play the internet at this point. Whatever you think about Tesla and everything else he does, he is bombastic. He's a lot of fun to watch. You have to remember, he's the one who thought that, he'd be selling for, $420 a share. Ha, 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 ha.
Yeah,
And that's why, he's considering selling Dogecoin for 4.20 billion.
Yeah, so there was, there was some fun tweets between him and Jackson Palmer, who was kind of parodying Elon's tweet that got him in trouble with the SEC, where he said, what was it, the funding secured, I think it was. And so, Jackson parodied that and said, like, considering selling Dogecoin.com for 4.2 billion, funding not yet secured.
It was a very entertaining April Fool's Day. Elon did some other things that day that people thought were April Fools, but they weren't.
And Trump did some things that everyone thought were April Fools, but they weren't. But that's like a daily thing there.
And keep in mind, there was also the April Fool's Day post about Bitcoin and the SEC and whatnot that apparently everybody on the news was saying, oh, that's what prompted the bull run. The market's just stupid. So April Fool's this year was highly entertaining. And Elon certainly played his part of it. And Dogecoin is the perfect medium for him to do so.
It was indeed.
The most important tweet there is, of course, that Dogecoin value may vary.
Just to cover their bases, because we need to let people know about that in crypto, but it's not incredibly obvious. So Caitlin is on the show. Her camera and audio is not yet on, so let me go to one of the other articles that we're going to cover. Oh wait, no, there she is, the wonderful Caitlin. Welcome. I'm so delighted that you're joining us, and you've just come straight from a conference, so I appreciate you popping in.
My pleasure.
Give us the rundown. A bunch of things have happened with the SEC this week. They put out guidance. So just walk us through what all of this means, because I've seen a lot of chatter about it that I'm trying to wade through.
Well, it's actually funny. I'm at my 25th Harvard Law School reunion and literally just got done from a panel talking about this. Before I dive into the substance, the Token Taxonomy Act was supposed to be introduced this week, and here comes the SEC with this big pronouncement. And I think it's so funny that the SEC came this week. I don't think that was purely coincidental, right ahead of the Token Taxonomy Act, because they did the same thing in Wyoming. Chairman Clayton made his infamous, I haven't seen any ICOs yet that weren't a security statement, right before the Wyoming legislature was about to vote on the utility token bill in February of 2018, might have been January, but the SEC does tend to drop, big things right before somebody's actually taking legislative action that might have an impact on it. So it's it was curious. Congressman Davidson's last tweet was that the Token Taxonomy Act was supposed to have been introduced this week, but obviously it wasn't, given what the SEC did. But on the substance of it, the SEC did something that they looked at clarifying. I was excited because they did actually, for the first time, give what's called a no action letter. Those of us who are attorneys we're scratching our heads all along when they said apply for no action letters. It takes years to get those and hundreds of thousands of dollars of legal fees. And they finally issued one in this industry. So it kind of gives you a sense that,
so it moves as slowly as the bureaucratic bit license, right?
Oh my gosh. Yeah. And of course it was, as if anyone who read it saw, that didn't describe a classic ICO. It was like the safest of safe harbors that they could issue a no action letter on.
Wasn't this basically loyalty points for this airline?
Of course. It was kind of like prepaid revenues, if you will. And I think, and because it's only an in-app token and it's not trading in the secondary market, it's so narrow that it doesn't really apply to most ICOs. But the bigger point is they did introduce this new concept called an active participant. And I think they did give some clarity around when a platform becomes decentralized, when there are no longer active participants. So that's at least helpful. But the biggest issue is that in the SEC's eyes, anything that trades in the secondary market, if it's been marketed as an investment, is a security. And that secondary market trading piece is problematic because essentially they've set it out to differentiate, these ICOs from regular old commodities, right? Gold trades in the secondary market.
Can't everything possibly trade in the secondary market? Like, you have the ability to do that with anything at all.
Of course. And there's nothing unique about these about these tokens just because they're digital. So, and we've seen airline reward points trade in the secondary market already, regardless of whether they're on a blockchain.
Yeah.
Gift cards trade in the secondary market
Absolutely.
already.
Amazon gift cards
Right.
has a huge secondary market.
Right. So it didn't actually help the industry that much. It will, on the margin, help lawyers give legal opinions to projects, but it's not going to bring a lot of the ICO projects that had to flee offshore out of the U.S. back into the U.S.
Right.
That's going to require congressional action, and the Token Taxonomy Act. I understand it's still out there, and hopefully they'll drop it, and hopefully it'll make some progress. I fear that classic, congressional legislation that's been watered down so much by all the people who've had an opportunity to take a crack at it, that it's not going to give us the redemption that the industry is looking for, and we're just going to have to keep soldiering on.
And as usual, I mean, the SEC puts out this guidance sort of thing, and it's never legally binding, and they're always very careful to say that it's not legally binding, and they have the ability to change it at any time and retroactively, charge companies who don't abide by their new laws that weren't in place at the time. It's all this very murky area, and they do not seem quick on the uptake to change that.
Yeah, that's standard for the SEC. They don't historically change their mind, though, very quickly. They're very deliberative. So that's the good thing, that the fact that they took so long, right? This is 14 months after Wyoming defined the utility token as not a security within the state of Wyoming. And now 8 states have followed. Colorado has enacted it, and Arizona has enacted it.
And such wonderful news.
Yeah. And that pushed the SEC, and it still took them 14 months to get this pronouncement out. So I wouldn't be so scared by that language, that it's not legally binding and that they can change their mind, because the truth is it does actually say what direction they're going, and they're not going to back away from it on short notice. This is actually going to be the direction they're going, and as most attorneys have concluded, it really didn't change where the SEC was coming from. They think pretty much everything is a security,
right?
And it's pretty narrow, the circumstances that aren't. So unless and until Congress clarifies what isn't a security, I think we're stuck.
Yeah, and any smart person in this industry, any smart lawyer, this is the advice they've probably been giving their clients all along anyway.
Yes, all along. True. Very true.
Yeah. So your general takeaway from this, is there anything actionable that people could be doing? Do you think that it's kind of neutral where we ended up? Is it good? Is it bad? Were you surprised by anything as well?
Well, I'd heard rumblings that they'd been telling people something was coming. So, no, I wasn't surprised by it. I was a little surprised by the timing, but it made me say, this is, yet another SEC stepping in front of a scheduled legislative action. But it is what it is. So I don't think, Naomi, that it really changes things that much. Yeah. It's marginally positive, because we did finally get a no action letter. It is consistent with the laws that were passed already in Wyoming and Colorado. There really isn't anything in those laws that I know of that isn't consistent with the SEC's view. It essentially says you can't market this as an investment. If you do, you're a security. And they want the platform to be operating pretty much right away. And that secondary market piece is giving a lot of people pause. And I think that's where hopefully Congress can come in over the top and clarify, but I'm not holding my breath on that.
Yeah,
unfortunately.
It's Congress who, again, is just not educated about what all of this is being asked to make proclamations, where they would need an in-depth understanding to really get what's going on, because it's so easy to pull the wool over someone's eyes with this stuff. It's this very new, complicated technology, and that's kind of being used to the advantage of legislators, I think.
Yeah, well, look what we did in Wyoming, right? There are more Wyoming legislators than Congress people who probably understand this at a depth that's necessary to make decisions. And it's out there, right? So many states are now copying this, and it's wonderful to see. And Congress should be copying it too. And if they pass that language, then it really would help to confirm that, if you've got a token for a platform that's already working and it is a consumptive purpose, then it's not a security. It may have started its life that way, like the SAFT structure proposed, that they start their life as a security, and then once they're released into the wild, they're no longer securities. We don't have that kind of clarity coming out of the SEC, though.
Right.
And I'm not holding my breath that Congress is gonna do it, because there are crosswinds in the congressional process that, have ended up in a bill that's less pure, shall we say.
Yeah, for sure. And there are a couple of actionable items for people if they're interested in this sort of stuff to get certain bills passed in your state. I'm going to post them in the information. Which two
Awesome.
are the ones that you recommend, Caitlin, just so everyone hears?
Well, the utility token bill, last year's HB 70, you can find the language on the Wyoming legislature. It's wyoleg.gov. Go to 2018 and look at HB 70. We also liked SF 125, which is the Uniform Commercial Code amendments that say that digital assets are property and they can be directly owned, and you don't have to deposit them at an intermediary in order to get optimal commercial rights under the U.S. Those are two big ones. South Carolina has also copied our fintech sandbox bill, and Godspeed, because what that does is it says to innovators, if you think you might be running afoul of state law, you've got 1 year, as long as you sort of kiss the ring, so to speak. You have to give advance notice and you have to post a consumer protection bond. It's not going to be that much money for most people, but you just basically have to notify the regulators that you're going to be doing something outside of the regulation. And then you've got in Wyoming 2 years plus one optional extension year to get the law changed to recognize what you're doing. So pretty much.
That's such a great idea. My gosh.
It is because, if Coinbase had that fintech sandbox, it wouldn't have had to pull out of Wyoming in 2015, right, which it had to do, and left some people stranded, yeah, with Bitcoins that they couldn't get out of Coinbase. And, that all is what resulted in the whole Wyoming Blockchain Coalition efforts. So it all worked out for the best in the end. But, a business would not have been stranded and its customers would not have been stranded if they could have gone into the fintech sandbox. So hopefully all states will recognize those, and they have reciprocity with other states as well. So that's awesome for innovators, because once you get into one state, you can get into other states. Right now, it really at this moment, it's just Wyoming and Arizona. But again, just like the utility token bill, 9 states were either enacted or we're in the process of enacting it within a 1 year period. It's just this is ballooning. The virus is spreading, and the good legislation is bubbling up through the states. And these federal regulators and Congress are continuing to be problems, but there are ways to get things done legally in the United States, and just go to the friendly states.
Absolutely. Well, thank you, as always, Caitlin, for the amazing work that you've done with the Wyoming Blockchain Coalition. It's so awesome. As I said, I'm going to post that information in the info in the video. So if anyone wants to do something proactive and take actionable steps after this, then they can go, they can talk to their local representative, they can say, hey, I think we should pass this bill in our state, etc., etc. So these are things that you do want in your state if we want crypto to be thriving and blockchain tech to be thriving. So thank you for coming on, Caitlin. I
definitely thank you, Naomi.
All right, see ya.
Take care. Have a good weekend. Bye-bye.
All right, so let's keep moving on. I want to mention, so there's this ABT wallet hack. Now, 60,000 polis was stolen from multiple masternode owners. They took away access from their coins and, without giving them access to their coins nor their private keys. Do you want to chat about this, Chris?
Well, this is actually kind of ties into a chat we had earlier in the week about security. Basically, the ABT wallet was updated and people downloaded it onto the computer that they had all their other crypto on. And it turns out that the wallet itself had been compromised and was stealing other coins. It wasn't just polis that was stolen. It was basically they was targeting as much other crypto on the computer as it could grab. So people had multiple wallets installed on their Windows computer, one presumes, and it would find the other wallets on that system and then access the private keys and send out the funds to be
really
sold
terrifying.
on whatever exchange it could. So basically, people were downloading the wallet. They weren't double checking the code, and they were, you were downloading a new piece of software onto a computer that has your bank's, your bank on it, all your crypto on it, and it's a risk whenever that happens. It's really unfortunate that this stuff still happens, but it does. You have to be very careful whenever installing anything new.
And it's sort of that fine line, right? A lot of people want to be early adopters. They want to be finding what's the latest cutting edge things, trying out new products, supporting the ecosystem as well. There are some great developers out there who are trying to create these awesome tools. But be really safe, just always remember that if you are going to be trying this stuff and it hasn't been vetted and it doesn't have a good track record yet, and all of these things are very important. So unless you're using like a brand new system that doesn't have anything else on there and you're testing this out, you're doing the security checks yourself, it may just be better to see what the market determines and to look at people who've actually run security tests into these types of things before trying them out.
Yep. If you don't know what you're doing, don't be the first one to download something. And as usual, if these other coins had been on a hardware wallet, they would have been secure.
Absolutely. And actually, so Chris and I just did a segment that I'll tell you guys about later, but we're going to be talking about security, sharing some fun tips with you. I'm excited to get that segment posted. But let's move on here. So we've got this Swedish bank that it's kind of funny. They're accused of laundering billions, but they stopped customers from buying crypto to prevent money laundering. So let's talk a little bit about this here.
It's the usual, laughableness that happens where everybody's like, "Oh no, your market's manipulated. Oh no, crypto is used by criminals."
Let's go to the regulated sector, like the banks, where everything's fine because we have the rules in place.
It's like, come on. I mean, that's not what you want. You just want to be in control, and you don't want competition. So that's why you're bad mouthing.
Come on.
Yeah. So this Swedish bank, they laundered $4 billion. Their CEO got fired. Or they laundered at least $4 billion for nearly a decade. So this has been going on for as long as Bitcoin has been around, basically. But then don't worry. They're watching out for you by stopping you from making a free market decision to buy a competing currency.
I mean, that's the thing, right? So if you're a good person, you probably don't need the laws. If you're a bad person, you're probably going to ignore the laws. So a lot of the time, laws just create a lot of paperwork. They go up the system and they don't save people. And they tend to create this false sense of security. People take less responsibility. People aren't as careful because they think that there's a backup there stopping them. So it's kind of this moral hazard that's also put into place. So, I mean, it's always surprising when people are just so gung-ho, ready to be like, there should be a law. It just, in reality, it's not the best option.
and the reality of it is so many times these criminals are using loopholes in the last law that was passed to do things or to take advantage of people or even that causes the next collapse. I mean, if you look at the history of stock trading in the United States and the Western world, typically the tools that were used in this collapse were added in the last collapse. I mean, it's just foolishness. I mean, just like, if you look at how much we propped up the housing market in the 2000 crash in this country, the 2000 .com bubble was the first recession ever where housing didn't drop. So of course, what was horribly overinflated and would be the first thing to collapse in the next recession? Housing. So it's predictable. Predictable and predicted is a phrase that a friend of mine likes to use. And this is just completely normal. Instead of adding more laws without ever going back to reevaluate the laws that are already there and maybe taking them off the books because, well, they didn't accomplish their goals, so maybe they shouldn't be there. We'll just leave them. What harm could it do?
What harm could just like an ever-growing stack of laws be? I mean, it gives people a disrespect of the law if they know that every day on average they're committing 3 felonies and they have no idea that they're doing it. That we have so many laws on the books right now that is what they say. Like, we're constantly committing these crimes and we don't realize we're doing it. So what kind of a mentality does that have when you're looking at the law, if we're treating it as this thing that like, oh, you know, it doesn't even matter, I'm always committing these things. Like, why not have, like, you know, truncate it, get rid of these things, get them off the books so that what's there is actually important. You don't have these dumb things, or, you know, stupid pretend regulation that just makes people feel good and don't do anything. Just get rid of it, you know, and then encourage people to have increased sense of individual responsibility. Like, I understand, I mean, the whole like Wolf on Wall Street stuff, like, that's disgusting. That man was terrible. He preyed on basically like retired people who lost everything and lost their savings. And so I understand the instinct of people wanting to say like, well, we need to stop this, we need to create a law for this. But to be honest, a lot of the times the laws don't help these sorts of things, and they continue to happen and they continue to thrive, but in this kind of we're semi-regulated kind of way where people think that it's all above board and people are still kind of getting screwed.
It's not like there were no laws when he was doing his thing.
Yeah, exactly.
I mean,
Bernie Madoff, completely regulated industry.
Yeah, Enron, completely regulated.
Oh dear me. All right, well let's talk a little bit more about government. I want to mention Trump. Dun, dun, dun. So recently, Trump says that the economy would take off like a rocket ship if the Fed would just cut rates and end their tightening policy. He wants to see some quantitative tightening rather than quantitative easing.
Other way around.
So quantitative easing rather than quantitative tightening. What we have right now is basically the Fed is slowly increasing rates. They have been threatening this for a long time, and everyone was like, well, they're not going to be doing it until the end of the Obama era. And sure enough, they didn't raise them. They were threatening it, but they didn't raise them throughout the Obama era. And it's like, I mean, there are a lot of things to talk about here. I'll let you start off, Chris, but I know I've got a lot to say.
So there's a lot of ways to approach this, but essentially, you know, Trump said today that he personally thinks the Fed should drop rates because raising rates has really slowed us down, and that they shouldn't be tightening, they should be quantitative easing. And you'd see us go up like a rocket ship, like you said. And then, of course, he said, despite that, we're doing very well. Those don't go together at all. So just as a brief history, quantitative easing is when the Federal Reserve makes money and buys assets. So currently, the Federal Reserve has somewhere over $4 trillion worth of assets, troubled assets that it has, you know, random mortgages, you know, shares of companies and banks and whatever. And what that has allowed is those assets to not collapse and not actually correct, and thus not have any negative effects on the stock market. So, or the market in general, I guess you could say, in the overall economy. So normally that was an emergency situation. Before the 2008 system, you know, the Fed maybe had a couple $100 billion worth, which still seems like a lot, but now it seems like nothing. And for several years through the Obama administration, through the recovery, the Fed was they weren't going into negative interest rates, but they were buying these assets from these companies and then keeping that money on deposit so it wouldn't go into the ecosystem and create inflation. So we had, I think I mentioned this last week, maybe it was the week before, the ECB, the European Central Bank, announced that they were restarting quantitative easing. And that's what they were doing, is now the ECB is back to buying assets. So of course the US then is going to fall behind because our bank isn't buying assets. And we all know that if the Fed just, you know, buys all the assets and owns everything, that probably wouldn't end well. I mean, we know that's something that is not really arguable. If the Fed owns the entire stock market, it doesn't mean anything anymore. So this lowering interest rates and continuing quantitative easing is something you do in an emergency situation.
And it's just become normalized now. Now this is something that politicians are just talking about, saying, oh, well, it's like they've forgotten that this started out as this emergency measure.
Yeah, and if you even look back at Donald Trump back in 2011, when he said the Fed's reckless policies of low interest and flooding the market with dollars needs to be stopped, or we will face record inflation. And sadly, the record inflation didn't necessarily happen in the ways we think about it, but we have had record inflation in the stock market, haven't we? All these companies worth so much more than they were before for no apparent reason. And all these companies, I mean, if you look at the Lyft ICO that just happened,
Right.
they're losing $1 billion
Did you say
a
ICO?
year.
I think your head's too much in the crypto space.
Yeah. IPO, initial public offering. Sorry, not even going to touch the IEOs that happened this last week.
Right. We'll talk about that sometime else. I mean, it makes sense to some degree. Like, it's kind of a smart play by Trump, even though he's clearly being very hypocritical, gauging it by what he said about this in the past. But it's kind of smart because right now you have people talking about making Trump the fall guy for when the economy collapses, which it's going to. And what always happens is after the Fed starts to tighten its belt, after we've had huge amounts of quantitative easing, which we had in 2008 and onwards, I mean, you have to slowly start putting interest rates back up again, and then there's just like a credit crunch right there. The liquidity dries up in certain ways, and the economy is going to take a downturn. But that's what you need, because you've had all of this reckless malinvestment spending like happening all over the place, and you have to have an adjustment in order to correct all of the awful things that they just created. So it's like having quantitative easing to save us from the quantitative easing that they did before, which was, they needed because of the quantitative easing they did before that. It's like this perpetual problem. So I understand now Trump, now that he's president, and people were saying, well, we want to say that it's because of Trump that the economy is doing badly. And Trump is looking at these interest rates saying, well, they're going up. I know what happens next. We know that in a time like this, the economy is going to have a downturn. It's just what happens. And he's thinking, what good does that do me if I'm in that position? I can have a long-term view and be like, oh, well, let's have a market correction. Let's try and fix all of this malinvestment that's happened. Or he can be like, I could just look at my term in presidency and my legacy that I'm going to leave behind and how I want to be remembered, and maybe I will just not tighten the belt and I'll leave that to the next administration to start doing that, and I'll be seen as this great president, who the economy did great and all of these things. So it makes sense he's doing that, but it's terrible, terrible, terrible for the economy.
It's just seeing how long he can keep the music going. Now, one of the financial guy I listened to back at the beginning of 2017 was talking how we're going to have the Trump effect, how good news is bad news, because Trump did some things to help the economy, whatever high level arguments you want to have about that. But basically, by having all these good indicators, good unemployment, low inflation, good stock market numbers, that's going to result in good news that normally prompts the Fed to lower rates. And by lowering rates, the Fed was going to, the other way, that was going to create good news that would cause the Fed to raise rates. And by raising rates, that would cause the economy to come to a collapse. So all the good economic news that Trump was trying to get was going to result in bad news overall, because the Fed was going to respond to it and react as if things were good and stop things from being good. Now, we all know that we are well past the average time frame between recessions. We're a couple of years past it. The average length of time since World War II between recessions has been under 8 years. And we are 11 years now. So, we had a brief blip a couple of weeks ago where the yield curve inverted. It's not inverted right now. And apparently for the indicator to be really strong, it has to be close inverted out for the quarter, I guess. But we're right there. We're really close. And again, this news today resulted in the yield curve on the 10-year dropping again.
Yeah.
So that brings us closer to the inverted yield curve, except for the fact that interest rates are going down all across the board. So it still hasn't dropped below the 1 year or the 2 year. And we are right on the edge of everything. We have no room to play. Personally, we need to let these malinvestments that have been going on for decades come to a halt and stop propping up these institutions. That will create a lot of pain, and I am heartless for saying so, because it will result in individuals getting hurt, financially speaking. It is inevitable when your livelihood is built around an industry that wouldn't exist except for malinvestments. But otherwise, it's going to be worse for everybody the longer it goes.
Yeah. So, I mean, we've talked about this on the show before, and I did that interview with Robert Murphy where he's talking about how the next recession that happens is going to be crazy and awful, and we should all be, making preparations for that. And I'm not sure what those preparations are. Maybe I'll invite him back on and say, like, how is your portfolio allocated? How have you diversified? What would you recommend? Because it's like, it's one thing to say, it's coming, it's gonna be terrible. Like, if we had that news, then what could we be doing? Most of us don't have capital to just be shorting the market ongoing for the next 10 years or however long it takes. So maybe I'll invite him on to maybe go through in detail some of that. I want to welcome on the show. So I have someone as a special guest coming on the show now, because I wanted to talk about, just while we wrap up here, this article that came out this week saying that Brock Pierce, he has taken out the first ever Bitcoin-backed mortgage. The first ever! Hooray! These are financial tools we can use with crypto now. And it's not accurate at all. It's not the first Bitcoin-backed mortgage. Interesting story though, but I thought this was a great opportunity to hit the microphone and to welcome onto the show Shawn Owen, who has a lot of experience with these kinds of financial tools. So welcome to the show, Shawn. His camera is currently off, so he is there somewhere, I'm sure.
Can you hear me?
I can hear you. Why can't we see you?
Well, I'm in the back of an Uber. Let me try here.
So we get like this wonderful moving camera, like high production value
the earbuds in, high quality. Let me know if the sound is okay.
And your Uber driver is going to get some education on Bitcoin-backed mortgages. So tell us a little bit about this, because you obviously are a part of Salt, which is a fantastic company that has been dealing with this for a long time. So walk us through some of this.
Sure. Yeah. So I won't comment on when the first loan actually was, because I wouldn't be able to quote you a specific date. But we have been doing the crypto-backed loans for a very long time. I would say that we were the first people to do that, saltlending.com. And we're there still ready for everybody. If anybody's interested in this product, I would say that the article is good at listing the value proposition, although it was a little sad face that it had everybody but us listed. So that kind of made my heart hurt a little bit. That's okay. We're still there. So you can come find a quality product when you're ready.
So I like what it says here, like the rundown. Use Bitcoin as a collateral for a mortgage. Like, yes, this is a great idea, which is why companies like Salt have been doing it for a long time. Then it has like, has the Mighty Ducks actor fallen on hard times again? Like, I like that this is like even a focus of this article. We have these revolutionary new financial tools, as well as talking about whether or not he needs a mortgage. Like, probably this was a method of advertising that these sort of things exist, saying, hey, look at this Bitcoin ecosystem, isn't it great, isn't it fleshed out, you can do all these things that you can do in traditional finance, but now you can just stay within the cryptocurrency ecosystem. So, like, what are your thoughts on all of it?
Well, I mean, somebody paid for the article, right? There's always somebody paying for an article like that. It very much reads like it. No disrespect to the first person who wrote it. I'm sure they're just trying to get click-throughs.
Right.
But yeah, that's my opinion on that. I think it's probably there for some marketing.
So how does all of this work? If, for example, I wanted to buy a house, do I just go to a company like Salt, for example, and do I put down Bitcoin as collateral, and then I would get fiat in return that I could, or they would pay the mortgage for me, or how does it all work?
Yeah, typically, I think the easiest way to think about it would be that if you own any type of blockchain assets, they are going to be stored in a wallet. They should be stored in a very safe wallet, ideally cold storage or multi-signature, something that's going to make you sleep at night. And why not put it behind an account where you have some other tools, for example, being able to borrow against it or earn interest. Those are both really great use cases, I would say. And so the way that would work is you would open an account, deposit. There it is. It's the same as it was, except for now it's on a new address. But because it's in that new address, you have proof where the asset resides, which is very important when you're locating an asset in something for the terms of collateral. That's a key component. Typically, that's a UCC filing, but I would argue that this is probably a better form. That could be debated, but then the provider will then allow you to take up to some portion. Everybody's got their own metrics. I would say safely, it's always better for the user to keep the LTV, which is loan to value ratio, much lower. If you're going to start with something moderate, go 50%, or don't over leverage yourself. It's always better to be prudent there. And then the lender will give you cash if that's what you're looking for. Otherwise, it could give you crypto. It could go either way. But in this situation, that those dollars would be sent to whatever fund bank account you needed, wiring instructions or ACH, etc. And then you would pay to purchase whatever the asset was. In this case, a home.
Well, it's always very exciting to look at these use cases and to look at different ways that you could be using your crypto. I know that recently Coinbase was talking about how they're staking crypto and you can earn 1%. So what you're saying, you can either have your crypto there, which may go up in value, and maybe you're happy with just taking that risk, or maybe you want to put it somewhere where you have like a guaranteed interest rate for a while with that. Like, there are all of these different ways that you can be using your crypto at the moment, and it's worthwhile looking into it all just to see whether you're someone who just wants to kind of hold it, keep it for a rainy day, have it really secure, have it in a cold wallet, whether you want it active, whether you want it as an asset, like working for you so that you can receive sort of a passive income from it outside of expected returns, which don't always happen, as we learned from 2018. So that's pretty exciting. And just to reiterate, so this was an article about the first ever Bitcoin-backed mortgage. So just pretend that this article came out a while ago, and this is a thing that's been going on for a while that you guys can definitely check out to learn more about. But thank you, I appreciate you coming on, Shawn, to talk about this.
It's a pleasure always.
Always. Lovely to see you. So, Chris, we will wrap up now. I just wanted to mention one more thing, and I can kick you off if you want, Shawn, or you can stay on as we say our goodbyes. It's totally up to you.
Okay, yeah, I have a product meeting I was in the middle of, so I have to jump. It's great talking to you. Hopefully everybody enjoyed that a bit, and if there's more information you need, you know where to find it.
Absolutely. See you, Shawn.
See ya.
See ya.
Okie dokie. So, Chris, just to wrap up here, so we've covered a lot today. The only other thing I just want to mention as we skip out, so apparently there's a Canadian dollar-pegged stablecoin on the way. I've been looking into stablecoins recently. I mentioned something on Twitter last week or week before about it. I was like, who's your favorite stablecoin expert? Because I wanted to really look at these things that are a lot more nuanced than people would at first believe. There's a huge difference between, say, DAI and Tether and USDC and Paxos. Like, all of these things are very, very different tools, and I think it's worthwhile for people to understand them. So I've been looking into that more, so maybe I'll look more into this Canadian backed one and give you more information. But apart from that, that concludes our weekly crypto recap for the week. Thank you so much to everyone who joined us here, everyone who's in the chat right now. I really appreciate you guys being here. You're so awesome. Huge thank you to you, Chris, as always, being on this show and being part of MBTV. It's always wonderful to have you.
Always happy to be here. It's a great way to close off my Friday.
Absolutely. And huge thank you to whoever sent me the anonymous $5 in smart cash on Bitback and sent me the power chat. Really, really appreciate that too. So if you guys like this show, feel free to share it around. Feel free to subscribe to my channel if you haven't already. I really appreciate that. That helps me out a lot. But otherwise, just thank you for being here and hanging out on a Friday afternoon. It's always absolute pleasure. So go and have a wonderful weekend, everyone. And go do something fun on this weekend and let me know what you do. And maybe I'll live vicariously through your fun things. But have a wonderful weekend, and see you later, Chris and everyone on the chat.
Sayonara, everyone.
Bye.